Welcome back, y'all. Greg Silverman here, SJ Garowitz, Tax and Accounting Solutions. This is part two of our series on ROBS rollover, how to access capital from your 401k plan to buy a business. This part two specifically deals with the tax advantages, the tax deferral, and explains a little bit deeper the tax aspects of ROBS rollovers. Okay, welcome to part two of our ROBS rollover. Why pay taxes now? Why indeed? So here we're talking about the tax deferral aspect of a ROBS rollover. So the first most important, it avoids the early withdrawal penalty that you incur with a retirement fund, maximizing available capital for your business. Why is that? Because all you're doing is you're using the capital from your 401k to fund a business, a C corporation. You're not, in fact, accessing the capital for your own personal enjoyment. Increase capital efficiency, more funds to go into the business rather than losing money to taxes and penalties. Okay, so that makes somewhat sense. No loan obligation. It's not a loan. It's not a debt product. It's accessing the equity in your retirement plan, and so there's no monthly repayments or interest. You can continue to save in your retirement plans. There's nothing that precludes you from doing that after you've established and financed to a ROBS rollover strategy. And the investment growth, as your business grows and succeeds, obviously the stock in the company increases and your retirement plan increases. I should say that the opposite can also be true. If you do not run the business well and it goes out of business, then your 401k will sustain a loss equal to the amount that was put in. That's why it's probably suggested not to do all of your retirement fund savings into a ROBS rollover strategy. The last point I want to make, which is also I think quite important, is that always to bear in mind to get this straight is that it's the retirement plan that owns the C Corp, the company. So instead of being stock in Apple, it's stock in XYZ Limited. And then you can always understand how dividends will flow and salaries and the like. Anyway, more of that in part three. Uno, dos, tres. Guys, thanks. Greg Silverman out.